When it comes to building wealth, many people believe that investing in real estate is a reliable way to make your money work for you. The idea of purchasing properties with a small initial payment, watching their value increase and earning money from renting them while you travel is appealing to many. However, it's important to be aware of the less pleasant aspects of real estate investing. In reality, it's not always as easy as it seems. One of the major challenges in real estate investing is the significant amount of money you need up front. It's not just about the property's price tag, you also have to consider the down payment. If you're buying a house, especially if you want favorable mortgage terms, you'll typically have to put down at least 25% of the property's purchase price. The specific down payment amount can vary depending on the property's value and where it's located. So, before you jump into the real estate game, remember that it's not always a smooth journey and it requires a substantial upfront investment. The upfront payment you need when buying real estate can be quite a hefty sum. For example, in places where property prices are high and keep rising, this required initial payment can seem like a big challenge. This significant upfront cost can be a major hurdle for smaller investors who want to get into the real estate world, especially when competing against wealthier investors. It's important to know that the 20% down payment rule is a general guideline, but there are some clever ways and financial options to get around the need for such a large upfront payment. However, these alternatives might have their own conditions, risks, or higher costs, so they aren't always a simple solution. But that's not all. When you're involved in real estate, you're also committing to ongoing financial responsibilities. There are closing costs, which cover expenses like title searches, appraisals, and legal services. You'll also need money for repairs and to keep the property going until it's fully rented. These expenses can add up quickly and put more pressure on your initial investment. If you need 25% for a down payment, you'll actually need a lot more money than that. Making a mistake in this calculation can be a big problem. Once you've invested your money in a property, it's not easy to take it out whenever you want. Real estate investments are like long-term commitments. This means that if you're in a tight spot and need your money quickly for an emergency or a good investment chance, real estate might not be the best way to get your hands on cash. Your money gets tied up in bricks and buildings, and it's not always easy to get it out fast. Trying to get money out through a bank loan can be a slow and tricky process. You need to show that you have enough money coming in to back up the loan. Even if you want to sell a property, it takes time. Sometimes it can take weeks or even months, even in a hot property market where it seems like houses are selling quickly. Selling a property isn't as simple as just putting up a for sale sign and waiting for offers. It involves a series of steps, from listing your property to finding a buyer, negotiating a price, doing inspections, and finally closing the deal. And even then, things can fall apart until everyone signs the paperwork. So, if you need to get your hands on your money fast for an emergency or another investment, dealing with real estate might not be the easiest way to do it. Property management is often talked about as if it's not a big deal when it comes to real estate investing, but it can actually be quite a burden. Being a landlord means dealing with tenant problems, which can range from late rent payments to requests for repairs and even more serious issues like evictions. Finding trustworthy tenants and making sure they take good care of your property can be a constant challenge. Taking care of property maintenance can also be expensive and time-consuming, especially when unexpected repairs come up. For those who invest in properties in different places, managing these assets becomes even more challenging. Dealing with troublesome tenants can be emotionally draining and can cost you a lot of money. Legal battles over lease violations or property damage can eat up your time and resources. While it's possible to set up systems and strategies to handle these tasks and issues, the truth is that many landlords struggle to do so successfully. This can lead to burnout and ultimately a lack of profitability. In a market that can change quickly, it's true that real estate tends to be less jumpy than the stock market. It usually sees slower and more stable price changes over time. Property values typically go up slowly because of things like where they are, the economy, and how much demand there is. However, even though real estate often goes up in value over a long time, it doesn't mean it's safe from rough times. Property prices can swing a lot, depending on where they are. Some places might have big price drops while others are going up, so it's not as simple as buying wherever you want. During tough times like economic downturns or when the housing market crashes, property values can go down a lot. This can leave investors with properties that are worth less than what they paid for them. These changes in the market can mess up your financial plans and make it harder to make money from your investments. Another thing people talk about a lot when it comes to real estate is using borrowed money to invest, which is called leveraging. It can make your profits even bigger when property values go up. Using leverage is a big reason why people like to invest in real estate. It lets you control a lot of property with only a small down payment. It might seem like a great idea, right? But using leverage can also make your losses much bigger if the market goes down. Let's say you put $100,000 as a down payment on a $600,000 property. If the property goes up in value by 10%, you've gained $60,000 in value, which is like a 60% return on your down payment. But if the property's value drops by 10%, you've lost $60,000 out of your $100,000 down payment. If the money you make from renting out the property doesn't cover your mortgage and other costs, you might find yourself in a tough spot, struggling to pay your bills. Also, if you use too much leverage, it can make it hard to have enough money for other investments or to handle unexpected money problems. Real estate investing isn't just about finding a great property and making money, it's also about dealing with a bunch of rules and laws that can be different in different places. These rules can be really complicated and vary a lot from one area to another. Zoning laws act like the referees of real estate. They're the ones who decide what you're allowed to do with your property. Imagine if you tried to change your cute little garage into a small store in an area meant for houses. You might face penalties for that. These rules can differ depending on where your property is located. There are also rules about how you can treat your tenants. Things like how much you can increase the rent, how you can evict someone if they're causing problems, and how quickly you need to fix things like a leaky faucet. Legal fees can quietly eat into your profits if you mess up and find yourself in a legal tangle. Those bills from lawyers can swallow your hard-earned money faster than you can say lawsuit. If you're not aware of these rules and regulations, what seems like a fantastic opportunity can quickly turn into a costly headache. In some places, real estate markets become overcrowded because everyone wants to invest. This can make property prices go way up like a rocket to the moon. This can create an even bigger problem because investors see lots of money being made and think it's a sure thing. But this can lead to a bubble where prices are too high and not sustainable. It's a bit like everyone thinking they found a golden ticket to wealth. Buying properties during these times might mean you pay too much, making it hard to make a good profit. This can be really frustrating because starting off in the negative makes it tough to see a decent return on your investment. A lot of people want the same good properties, and this can lead to bidding wars. Bidding wars don't just make prices go up, they also make it harder for you to get a property that will make you money. Then there's the question of whether this will keep happening or if things will go downhill. In conclusion, it's important to remember that real estate can be a good way to make money, but you have to be smart about it. It's also important to know about the problems and challenges that can come up. Before you start investing in real estate, do your research, talk to experienced investors, and really think about how much risk you can handle and what your money situation is like. If you like this video, kindly subscribe to my channel, share my video, like, and drop a comment.